I trade inverse fair value gaps as my strategy, and in this video I'm going to show you guys exactly what to do and what my thought process is going forward in trading these strategies. So in the chart, as you can see here, we have a fair value gap, and over here there's liquidity that was taken. So as you can see here, the fair value gap, if you stand back from the chart, it looks pretty obvious. So that's my indicator on to knowing whether this is a good fair value gap or not. So what I'm going to be doing when I see this fair value gap is obviously I'm going to be waiting for a close above because I'm trading inverse fair value gaps, which is basically betting against the ICT traders that are going short in this position. So as you can see here, these two candles are clear indicators of a rejection on this inverse fair value gap, which makes the confluence a lot better when I take this trade. So I'm just going to delete this, and so here I would enter right here, put stop below the inverse fair value gap, and I wouldn't actually have a hard stop, so I would wait until the candles were to close below the inverse fair value gap, invalidating the gap, and that's when I would close. So this is not like the legit stop, but in order to calculate position size, obviously I'm gonna put a stop like around roughly here. So then what we're gonna do is we're gonna enter the trade here, and the stop would be, or no, the break even will be this high over here, this intraday high that formed. So the second that market taps this intraday high, we will be putting stop at break even. So once the stop is at break even, we have a risk-free trade in this trade. So here I would also be targeting this high. So this is the first high, the second high, and also sometimes in the break-even trades, or in when market taps the break-even section, you could also put a TP here so that you can actually get some profits when you're entering a trade, which is sometimes what I do. Usually I take off 50% here and then the rest in this second TP. And usually trades like this happen every single day. So I'm about to show you a different trade. So this is another trade that I wanted to show you guys. So as you can see here, liquidity was swept right here, and with an extra confluence of a fair value gap reversal move. So this is like the momentum that we want to see in order for this gap to be completely closed above. Also, as you can see here, this also inversed, but me personally, I probably wouldn't get in here just because of this fair value gap. It's way more prominent, it's way more obvious, and we want to get into the obvious fair value gaps. We don't want to use these not obvious fair value gaps because sometimes they do fail, and in this situation it didn't fail, which is good, and that shows you how strong the strategy is, that sometimes when it's like a smaller fair value gap, it still does work. But we want to have a 80% plus win rate, so that's why I wouldn't be taking those. So here we would look for the sweep right here, beautiful sweep, and we obviously, our daily bias is bullish, so we would be targeting this high right here, and we would enter off this candle close above the fair value gap. So obviously, as you can see, it won with a 1.75 R, and as you can see here, it came back down, and then obviously wouldn't have worked out, but since it hit this target, we would have made a lot of money on this day. And that also shows you how strong this strategy is, just by using liquidity and inverse fair value gaps. Now I'm going to show you guys another trade, and it's going to be the final trade. So I want you guys to backtest this strategy and see for yourselves how good it is. All this strategy is inverse fair value gaps and draw of liquidity. So I want to show you guys another trade. So as you can see here, this is beautiful liquidity being swept, and this beautiful humongous fair value gap that we want to see. So what did I say earlier? It's just an inverse fair value gap and draw of liquidity. So as you can see, market swept, stopped everybody out in these positions, and so we're looking for a complete reversal to the upside. So now once the candle closes above this 1 minute, we will be entering. So it didn't close on this candle, but it did, however, close on this candle. So we would enter right here, and we would put stop right here. Target would be a high that we see, which is over here. And as you can see, we would have gone a 1.24 R, and we obviously would have held a runner, maybe all the way to up here, wherever else there's liquidity. Let me find it. Yeah, over here. All right. So this is another high target time frame, and this will probably be where we get out of our entire position with the runner. So with the runner, we would be leaving, that would probably make up for the like first TP that we hit, which would be this right here, TP1. So the second TP1 would have hit, we would have just put everything stop. We would have put stop to break even, and we would have been risk free on the entire trade. So this is why you guys need to start doing this strategy. This strategy has made me profitable in like almost 2 months. So now that you guys kind of have an idea of the strategy that I'm trading, I want you guys to backtest, like I said before, backtest this strategy for yourself. Just look for inverse fair value gaps, draw up liquidity, and that's all you really need to be a profitable day trader nowadays.